Okay, this carries on a series about teaching my son about trading. So, why don't I day trade? Right, is answer to this real easy. When you watch day traders, this is number one. You watch day traders, and the first thing they're trying to do is become a swing trader. Day traders are generally undercapitalized, so they've got a really small amount of money, and they're looking to turn it over during the day, high pressure, and build it really quickly. And they're all of them, if you find any traders, trying to go out to a longer time frame. Now, so for me specifically, if I'm going to day trade, first things first, you need an infallible internet connection. Now, when you're retail, so you're from home on your, maybe you've got a fiber, maybe it's generally reliable. It is not reliable enough to risk day trading because you need instantaneous execution. You'll go for months of making great trades, let's say, and then one time you'll either have a power cut or you'll have a internet connection, and it could potentially wipe out your entire gains. That's number one, is you're not supported like a working for a company that has backups to backups to backups on their fiber line and their connection, their pipe to the stock exchange. So that's my main reason. Number two, well, that's like just your basic infrastructure reason. Next reason is you need an environment of complete focus and attention. Now, even though I trade from open to close, I'm not in the day trading group, because imagine it, right? You need to sit there. You need to be staring at your price or whatever mechanism it is that gets you in and gets you out with your finger on the mouse, ready to execute, one, the entry, and two, the exit. And you need to do that day after day after day after day. That's quite a lot of pressure. Now, take the next step of, let's call it swing trading, because most people understand what that is. You enter and you can move your eyeballs to something else. If you're a day trader, you cannot move your eyeballs or your finger from that mouse. So immediately you're in a less stressful situation, because you could potentially put on a trade and then you could enter your stop and your profit target and walk away. Day traders, by the strictest definition, don't do that. They're looking for constant monitoring and evaluation. So the longevity of a day trader, I think, is limited. The lifespan of a day trader is limited. So that's another reason why, having done it in the past, I've made a video on it, where we were liquidity providers in the FTSE. That was day trading. But my general sense is that it doesn't appeal to me, because I want to be able to, for example, I've just been on the east coast of Malaysia. I took my 3 laptops and I'm able on sometimes a mobile hotspot, sometimes on like the hotel internet, sometimes on just any connection I can get. And obviously, there's no way I could day trade in that environment. Whereas swing trading, yeah, that's possible. I can do that. I've gone, I guess I swing trade a portfolio of stocks. So I think I'm even one more step removed from the intensity. Like, for example, if it hasn't happened, but if I happen to have a no connection day, I could pick up where I left off. It's not happened, which is strange, touch wood. But that is possible, and it wouldn't be a showstopper. So when you're starting to look at how you want to trade, just consider your infrastructure and the longevity of the system you're pursuing. Next thing to consider, you need, I've said it before, as much capital as possible. This is a business. You are not gambling. You need, just like if you started a company, you need money for stock. And funny that, because you're about to buy and sell stock. So just like if you were going to buy, let's say you're going to set up a website and sell drones, well, you're going to need 100 grand's worth of drones. So why would you think you can make money in the stock market with and not have 100 grand? I would suggest having at least 100 grand to make a real go of trading and having enough capital to create enough chances, have enough spins of the wheel. If you've got like a couple of grand, you're not ready. You need to earn some more money. You need to get some money from somewhere, sell something. You need to get rid of all your clothes on eBay. You need to just literally somehow accumulate the capital, and not borrowed, not prop shopped, not leveraged. You need the actual cash. So the style that you pursue, I'm biased because I pursue a portfolio. I've got loads of spinning plates, a few hundred spinning plates, and I just need some of them today to come good. And the others, okay, don't come good today, maybe tomorrow. And I'll take off. I like to think of trading similar to a company. I'm trying to generate cash flow, free cash flow. So I want to take a profit where available today and then reinvest that capital tomorrow. Or if I need it for expenses, I need it for expenses. I'm not looking, now what that means is I'm not looking to go like all in on single bets. So a lot of the, I love YouTube. It's kind of why I make these videos. There's a lot of YouTubers who are single shotters. They will trade a single stock or a single future or a single Forex pair with all their capital. And on YouTube, they're all driving Lambos. But in reality, I doubt that Lambo's being paid for by trading, probably more from the course they sell. But that's a whole nother side to this environment. The best traders I've seen professionally manage portfolios. They have Tesla stock. They have Intel stock. They have a futures position. They have a commodities position. They have some options. They have a whole array. Like if you go into a 7-Eleven or a Tesco, they don't just have Diet Coke on a single shelf. They have 200 different SKUs. And for me, because I want to treat this like a business, so I have my 100 stocks, my 100 SKUs, and just like in a shop, I've spoken about this before, I want to make a tiny amount on each loaf of bread that walks out the door, and a tiny amount on the cup of coffee or the cup of tea or whatever it is. And sometimes, someone comes in and buys a slab of Coke and I make a bigger profit. Great. But day to day, I'm looking to be that Mackie D's model where I'm making a couple of cents here and there, a couple of cents many times a day, a few cents on each transaction. I know it's completely perverse to what you see on the internet, my approach to trading, because it really is just tiny amounts just clipping off the top of the stocks I hold. So think about the business you want to be in. Are you going to hold all your investment for a single exit? Because that's a tough gig. Or are you going to go down the portfolio method and rotate your capital around, profiting where available and reallocating? The other thing you must do is build up a history. Again, we've spoken about this before. You need precise reasons why if you're going down the technical route, you need to log 100 trades with exactly that technical specification, and then the result. If after 100 trades you don't have a clear edge, you must reassess your strategy. If you're trading on fundamentals, enter 100 trades and then assess. Have you created a defined edge. If not, reassess. And then the biggest one for me, the one that I think, everyone gets everything wrong in trading, but I hate I hate using the word hate. I don't like the whole, whenever I listen to some podcast on trading, the first thing they bang on is it's normally a Forex trader, and he's talking about 3 to 1. So he's risking 1 and he's making 3 times. I completely disagree with that approach. If you have a 50% chance, if you win 50% of your trades, you'll have a losing streak of up to 8 trades. It's pure math. I hate the word math. It's pure mathematics. So when you have a 3 to 1, your percentage is much less than 50%, and you're going to have losing streaks of up to 20 losses in a row. Now, that is massive, and for me, totally unsustainable, unrealistic, because let's say you're running a 50-50 scenario. So you get your 8 losses in a row. But let's say just for some reason, you go through a really, you're not quite as good with your analysis. So let's say you have a 40% chance. Your losing streak is going to be even greater. And then I think that's when people move on to the next strategy. Strategy hopping is such an issue with traders that they really need to think about all eventualities of what they're following. So I personally like the 50-50 bet, because you should just about break even. And after 100 trades and you're breaking even, that's actually a great starting point. Couple of tweaks, you can nudge that up to 51, 52, 53, maybe 54%. You've got yourself a winning strategy. These people that go for these 3 times the win to the loss, I think they're having these massive losing streaks, and I think it's really detrimental to their ability to trade long term. I've always been an advocate for stocks, US stocks particularly, because it's the cheapest market to trade. And like if you're doing a business, again, approach it like it's a business. You want your cost base to be as little as possible. For example, my cost base, obviously internet, but I'd have that anyway. My compute, I have these 3 laptops I bang on about that I carry around. I have then desktops that you can see around me. I don't spend a lot on them. They've only got to run a platform, and because again that I'm not day trading, they don't need to be mega high spec. And then subscriptions, well, brokerages are free, and then given the number of trades I do, commissions get less and less the more trades you do. And then I then subscribe to a live data feed to Excel, and that's the basis behind my strategy. Just having my portfolio, it's coming from the professional side. They just don't use charts, and neither do I. Again, it's a perverse nature of YouTube. Everyone's trading with charts. Every professional I've ever seen normally just has a quote list. He has a quote of where the market is, the bid and the ask, and sometimes the volume on the day. And he's trading on that number. He's not trading from a chart. So I don't pay or subscribe to big charting packages. Obviously, my brokerages have charts, but I know a lot of people have like the Trading View, subscriptions. My subscription is to a live data feed to Excel, where I run my calculations, and that's how I manage my portfolio. So think about that cost base. And then the other bit about if you get yourself in a real tight corner where you need this perfect chart or feed or thing, you're really, again, restricting your ability to be mobile with your trading strategy. A bit like if you're a day trader, I think you need perfect conditions, you need a perfect mentality, and you need perfect infrastructure. It's a really hard gig to get yourself into. So think about that before you go down this. And I think it is boring writing a business plan, but it might just be worth just jotting down, like, how reliable is the power source in my house? How reliable is the internet? Is my compute adequate? Am I mobile? Can I manage this on a daily basis? how much time do I have to commit? Because most new traders can't commit 7 hours staring at the screen. They're going to be dipping in and out. They've got a job. They've got other commitments. So naturally, you're already not a day trader. You're already looking at the kind of swing trading or investing side of this stuff. And don't get me wrong, I completely love it. I love there's a YouTuber I actually really like. He's got the same name as me, and he is a stock day trader. And you know what? He's totally legit and a really good guy to watch. And he's got it completely dialed in. And I know, well, I think he's legit because just what he talks about, he's just giving away the signals that he is a legit intraday day trader because he's so tight with his daily procedure, and he's so tight with that. He's like, I had my first day off in 200 trading days, and that to me was like, you're legit. Whereas other guys are far from legit. So the key here for me is get 100 trades under your belt and I don't want to push you down a certain route because, like I've said before, everyone trades differently. So whether you're going down technical, fundamental, swing, whether you want to try day trading for the first 2 hours of the trading day, whether you want to trade FX, commodities, whatever it is, I don't want to push you down either road because I think we all gravitate to what suits us. So go down that road and then be disciplined. You need to get your 100 trades exactly picture perfect, journaled, and then you assess. You don't assess after 10, don't assess after 20. Get to 100. How did you do? Refine the model, go back. And just be careful of things like 3-to-1 risk reward. I would rather it was 1-to-3 because what you want is winners. Just like the bookies, just like Vegas, this is me speaking purely. You want cash flow, you want profits, you want winners. And the only losers you want are the ones like, oh, did we lose that one? Like it's a surprise. You really want to put yourself in with these long winning streaks. I can't emphasize it enough. Put yourself in a position to have winners, not loss, winner. I would take winner, loss any day of the week and twice on Sundays. If you're going down the investing route where you're buying stock, that's a whole nother ball game to go down. That's far more just about spreading your portfolio and building basically your own S&P 500. But trading, let me know in the comments what you don't know, what you want me to cover, and I'll give you, as usual, my unadulterated opinion. I hope that's useful. That's it.